Before the opening bell, U.S. indices, they closed up on Thursday, lifted by shares in energy, semiconductors, and semiconductor equipment in household and personal product sectors. Now, on the economic docket, we had the U.S. trade deficit declining to $39.9 billion during the month of February, while initial jobless claims, they spiked to a record 6.648 million for the week ended March 28th. Continuing claims, they jumped by a total of 3.029 million. Also, factory orders, they were flat in February, and durable goods orders rising 1.2%, this February's final reading. Meanwhile, after hours, Tesla reporting deliveries dropping 21% on the quarter to 88,400 units in the first quarter, above expectations, and production that was down 2.1% to 102,672 vehicles. Meanwhile, Twitter upgraded to buy from neutral over at Goldman Sachs, while Bed Bath & Beyond, the home furnishing retail company, extending the temporary closure of its retail stores until at least May 2nd, 2020. Now, in terms of expectations today, we do have results from Constellation Brands, and on the economic docket before the opening bell, we have the U.S. employment report, that is, which includes non-farm payrolls for the month of March, as well as the U.S. unemployment rate. Meanwhile, after the opening bell, we have market composite PMI and services PMI. We also have ISM non-manufacturing PMI as well. Taking a look at the markets, the S&P 500 is where we begin. That sees a bullish bias above 2455. Meanwhile, the Nasdaq, that sees the bias remain bullish, and that's in focus. Even though a continuation of the consolidation cannot be ruled out, the extent should be limited. Long positions above 74.45 are favored, with targets at 76.55 and 77.75 in extension, while the Dow Jones, that sees the bias remain bullish.